All right, today we're diving into something that feels like a real financial first. There's a company called STRD that's taking its massive treasury of Bitcoin and using it to build a whole new category of investments. Honestly, this could be the blueprint for how major companies operate in the future. So let's break down exactly what they're doing. This quote from Adam Livingston just nails it. He says, Strategy built the first complete yield curve backed entirely by Bitcoin. Now, a yield curve just shows you the interest you can get on different investments over different time frames. What Strategy has done is create a whole menu of these, all built on a foundation of digital gold. So what does that actually look like, and why is it such a game changer? Okay, first up, let's take a look at this new financial blueprint they've put together. The best way to think about it is like an investment menu where every single option comes from their huge stash of Bitcoin. Yeah, let's really run with that menu analogy. Every single item we're about to look at is crafted from one single core ingredient, a massive, secure pool of Bitcoin. The whole idea is to offer investors different flavors of risk and reward, but all coming from the same kitchen, so to speak. So, what are the main courses on this menu? Well, let's meet the prefs. These are Strategy's core offerings, and each one is designed for a totally different investor appetite. This slide is basically our cheat sheet. At the top, you've got STRF, or STRF. Think of this as the safest bet for conservative investors. It has the highest seniority, meaning they get paid first, and a 10% cumulative coupon. That means if a payment is ever missed, it has to be paid back later. Then in the middle, there's STRK, or Strike. This one gives you a nice yield plus what's called an equity kicker, which is a cool option to convert it into company stock down the road. And finally, at the bottom, you've got STRD, or Stride, for the real high-yield hunters. It pays 10%, but, and this is key, it's non-cumulative. So if a payment gets missed, it's gone for good. That's the risk you take for that higher potential return. And this chart just illustrates those trade-offs perfectly. That vertical axis shows seniority, who's first in line to get paid. You see STRF sitting right at the top, making it the most secure. As you move down and to the right, you get into the more volatile stuff. It's basically a visual map of the risk and reward baked into every single product. So here's the million-dollar question. How can Strategy possibly create such different products from the exact same pile of Bitcoin? Well, it all comes down to some really clever financial engineering. Let's peek at the recipe. The secret sauce is in these 4 design dials. It's amazing. By just adjusting the payout type, how often the rate can change, whether or not you can convert it to stock, and of course, where it sits in the payment pecking order, they can fine-tune each security for a specific need. It's almost like a sound engineer mixing a track, but they're doing it with financial products. And what you get in the end is this, a really clean staircase of risk. At the very bottom, the foundation, you've got the digital capital itself, the Bitcoin. Then, each layer stacked on top, from common stock to all the different prefs, represents a clear, predictable step up in both risk and reward. It's just a beautifully logical way to structure it all. But look, none of this cool engineering would matter one bit if there wasn't a massive safety net underneath it all. This entire system is built on an ironclad foundation, a digital fortress of collateral. And here is that foundation. We are talking about more than 639,000 Bitcoin. Just to put that into perspective, this is one of the largest corporate treasuries in America, and it's the only one of its kind built on Bitcoin. It's huge. So this is the really crucial part. It all boils down to this number, 12 times. That's the over-collateralization. In plain English, it means for every single dollar of debt from these preferred stocks, there are $12 of Bitcoin just sitting there as a backup. This creates what the source calls deep first loss protection. Okay, I know exactly what you're thinking right now. This is Bitcoin we're talking about. It can be super volatile. So what on earth happens if the price just completely tanks? And here is the stress test. Check this out. Even if the price of Bitcoin were to crash by a whopping 70%, there would still be 4 times the amount of collateral needed to cover these preferred stocks. The initial investment remains incredibly well protected, even in a crazy bad market scenario. So let's zoom out for a minute, because what we're really looking at here is bigger than just a few new stocks. This is about building a bridge between 2 financial universes that, until now, have been totally separate. So why does this matter so much? Because for the first time ever, it gives traditional fixed income investors, we're talking pension funds, insurance companies, a legitimate way to get exposure to a yield that is generated and secured by Bitcoin. It's literally unlocking an entirely new asset class. And this is where it all comes together, right? You're seeing the old world of finance, things like credit spreads, meeting the pure, raw power of a new digital asset. Strategy's innovation sits right in the middle of these two worlds, creating a regulated, understandable bridge where one just never existed before. So we have to end on this question. Strategy didn't just invent a new product, they might have created a whole new blueprint. As more and more companies start adding digital assets to their balance sheets, this model could very well become the standard. So the real question is, are we getting a sneak peek at the future of corporate finance? That's the big idea to really chew on.